All right, folks, let's jump straight into the news. We have a lot to break down and cover in this video. This first article is from FX Empire Silver Daily Forecast. Prices plunged to $29.50. Is it time to sell? Which, of course, is a horrible idea. Another article that came out today, silver traders should stay focused on the gold to silver ratio. We have an article from MSN.com that came out 2 days ago, which is titled, Silver's Got the Shine to Beat Other Asset Classes, Better Buy on Dips. Another article came out today from businessstandard.com, green tech demand, supply constraints likely to fuel silver's bull run. We have another article that came out today, July 19th, ChatGPT 4.0 predicts silver's price for the end of 2024. And ABC Bullion posted a huge layout of silver's potential, the forward, showing interviews with Michael Dorenzio, which is the CEO and president of the Silver Institute, which some call the Scammy Silver Institute. But there's just so much news and more. So when I'm going through all of this on a daily basis, it's hard for me to pick and choose which ones I should highlight. So I'll try to cover at least 2, maybe 3 of these articles in this video, but there was a little recap. If you enjoy videos like this on a daily basis, then make sure you click subscribe because I do just that. Let's jump into the news. Silver prices declined to $29.52, pressured by a strong US dollar and profit taking. Now let me ask you a question, folks. Do you think the US dollar is going to consistently stay stronger for the foreseeable future? Because that's the only way that silver will stay down. So if anyone says that silver will never go to 35 or 40 or 50, then they genuinely have to believe and admit that they think that the dollar will hold its value until the foreseeable future. And we're talking about years down the line, because if I'm talking about $50, $100, $200 silver, but I'm not planning on selling for 10, 15 years, then the dollar has to survive and hold its value for that long. The only way that silver will be held down is by a stronger dollar, but we know the dollar inevitably is going to collapse. So what does that tell you? I mean, you could look at it however you want, but that's just a fact, right? Silver is pressed down by the dollar's strength, but the dollar is rarely strong, and it is completely diminishing in purchasing power as it's lost 98% of its original purchasing power. So anyways, rising unemployment claims and strong U.S. dollar weigh on silver despite Fed cut expectations. Geopolitical tensions, including Middle East conflicts, may support silver prices as a safe haven. Now we have the market overview. Silver prices continue their downward trend, set to close the week on a bearish note around $29.52 with an intraday low of $29.38. This decline is largely due to the resurgence of the US dollar, which has strengthened despite expectations of a Federal Reserve rate cut in September. Cautious market sentiment fueled by escalating geopolitical tensions might offer some support to silver prices. However, the prevailing strength of the US dollar is overshadowing these potential supports, creating a challenging environment for silver. And I'm sure a lot of this actually had to do with the convention that's happened. I mean, if people are starting to gain trust in the system again and seeing hope, then it might be a little more optimistic. I mean, obviously there's a lot more going on, but I'm sure that did play a huge role since a lot of silver is based off speculation, fear, uncertainty, worry, doubt, right? FUD. So silver prices fall amid U.S. dollar strength and rising unemployment claims. Despite expectations for a Federal Reserve rate cut in September, the U.S. dollar has gained strength, driving silver prices lower. Recent data from the Bureau of Labor Statistics shows a rise in unemployment claims to 243,000, marking the highest 4-week average in over 2.5 years, signaling a weakening job market. This, combined with decreasing inflation, suggests that the Fed might soon begin its rate cuts. Positive U.S. manufacturing data and market predictions point to a 100% probability of a rate cut in September, with 2 more cuts expected by the end of the year. The U.S. dollar strength and increased unemployment claims are pressuring silver prices lower. However, expectations for Fed rate cuts and strong manufacturing data could offer some support. Now we also have the geopolitical side of things. Geopolitical tensions and humanitarian crisis could boost silver prices amid decline. Former President Donald Trump's comments about Taiwan paying for the U.S. for defense have raised doubts about America's willingness to protect Taiwan from China. This uncertainty, along with ongoing conflicts in the Middle East and the Russia-Ukraine war, could support silver prices as investors seek safe haven assets. In the last 24 hours, Israel's intensified strikes on Gaza have killed at least 54 Palestinians, worsening the humanitarian crisis. Israel has drastically reduced Gaza's water supply, creating severe health issues. Saudi Arabia criticizes the attacks as violations and fears a broader Middle East conflict growing. The geopolitical uncertainty, including doubts about U.S. support for Taiwan and escalating Middle East conflicts, could boost silver prices as investors seek safety. However, silver's recent decline is due to a strong U.S. dollar. So we have the short-term forecast. Silver's likely to remain bearish around 29.52, pressured by a strong U.S. dollar. However, geopolitical tensions might offer some support, potentially stabilizing prices. Now, in my personal view or opinion, which, I'm not a financial expert, but this is my opinion. I definitely think that silver is going to stay around 29. I feel like there's too much stability, too much support around those levels, and there's going to be a lot of people capitalizing on these dips, which we might go into if we have enough time in this article. But this is another, actually, no, yeah, let's dive into this one because it's kind of going off of what we just mentioned. So silver's got the shine to beat other asset classes, better buy on dips. So investors looking beyond red-hot equities could consider buying silver, which could outperform various asset classes over the next 12 to 15 months. Wealth advisors, however, recommend buying the metal only on dips or making staggered purchases after the recent price run-up, which is a good point. If you're trying to enter the market, right now is a good time. You never want to buy when something's at its highest price, which unfortunately most people do. Most people will buy when silver's past $50. Most people buy when silver's $33 or $32 and everyone's talking about it. Then they get in because that's when all the hype is there, all the media, your friends, family, neighbors, squirrel in your backyard, the cats talking about silver, right? So it's easy. You have that confirmation and that validation. But the best time to get in is before the curve or when there's a dip. Buy low, sell high. Don't buy high. Don't buy at the highest price it's ever been. You buy low, buy the dips, sell the tops. So right now is a time to enter since it was just up to 32.50 something only a couple weeks ago, and now it's down to 29. This is definitely a dip. Take advantage of it, right? That's basic investing 101. Wealth advisors, however, recommend buying the metal only on dips. And to try to lower your dollar per ounce average, especially since prices have been a lot higher than the past few years. Quote, given its strong industrial usage and expected recovery in China, investors can make a 5 to 10% tactical allocation to silver, end quote, said Viral Bot, founder of Money Mantra. Quote, they could buy on dips and stagger their purchases over the next 3 to 6 months, which that is a good idea. You never would just want to go all in, because let's say you go all in and then the price goes up a couple of dollars within the next couple of weeks, or you sell and then the price goes up a couple of dollars, right? I mean, it's why you always want to, you never want to do it all at once. But anyways, prices of silver are seen firming up over the next year or so on account of the growing demand as an industrial metal, expected recovery in China, and a likely interest rate cut by the U.S. Federal Reserve. So far in 2024, silver, which trades at around $30, right now it's 29 something, has a return of 24%. So investors must buy the white metal on dips with a target, at which we're not going to go into these types of currencies, but anyways, the Bullion analyst said, which after the sharp rise, we are likely to see some profit booking at certain intervals. However, any major dips could be used as buying opportunities. The next big trigger could be interest rate cuts by the U.S. Federal Reserve. Silver prices tend to strengthen when interest rates fall, as the metal becomes more attractive than interest-bearing assets. Analysts said that higher industrial usage led by a growing focus on renewables has created a demand-supply gap, as supplies are likely to be limited due to mine production capacities, thereby driving prices higher. Quote, the demand-supply gap has been in deficit this year for silver, marking it the fourth consecutive year. Silver's usage in green tech is propelling the industrial demand, especially from the solar and EV sectors. And yeah, we've actually had a deficit of 775 million ounces in the red in the last 4 years alone. They're predicting 250 million ounces in the red this year. Higher industrial demand for silver comes from its use in solar panels, EVs, 5G technology. China alone accounts for 90% of global panel shipments. And it's actually a lot more than just those. If you watch my channel, you also know about military and aerospace. A lot of silver is used around there. So I guess now we have time to cover a third article. I didn't think we would get this far, but trying to push through. This article is from businessstandard.com, which came out yesterday. Green tech demand supply constraints likely to fuel silver's bull run. So silver's been among the best performing asset class year to date, outperforming gold. While it was given a return of 24.7%, the yellow metal has notched up 17%. So, I mean, that's not bad, right? It's one of the best performing asset classes this year. So when you think about how far silver's come, I mean, it's so easy to get caught up in the day-to-day prices, right? And I really try to encourage people to not care what the price does on a day-to-day basis. It really doesn't matter. Like, if I wasn't a broker, I would not even look at the price unless I was planning on maybe buying, like, potentially in like or selling, but I'm not going to sell. So the silver's price is completely irrelevant right now. The only time it would be relevant for me is if I was planning on buying or selling. But even when I'm buying, I'm not caring if it's 29.50 or 29.80. I don't care. And if I'm selling, which I'm not planning on for 10, 15, 20 years, if I ever sell at all, that's when I would. So I don't care about the day-to-day prices. To me, that's irrelevant. I have to pay attention as a broker, but I really did. Well, I guess also being a YouTube channel that covers this stuff on a daily basis, but the grand scheme of things, what's the point of looking at the price every day? Right? We know it's going to go up in the future. And so I don't know. If you're maybe a marginal trader or a day trader or something with cryptos or whatever, then that makes sense. But if you're not actually involved in trading it, then I don't see why. I mean, you could check the price, but I just don't see why it would like affect you emotionally. I see some people get really, worked up or beat down when the price drops like a couple, 50 cents or whatever. And it's like, but why does it matter right now? Like, were you planning on buying and now it's a better time to? The only reason you'd be mad is if it dropped is if you were planning on selling and now you won't get as much for it. So if you put some logic to it, it really doesn't make sense. So anyways, let's look at this. Actually, wasn't there that article about let's cover this article as well. Silver traders should stay focused on the gold to silver ratio. So this is the other one I wanted to cover today. So we've actually jumped around to 4 different articles. This is also from FX Empire. And folks, make sure you like this video. We've covered 4 articles so far. It's probably a record within the 15-minute time frame. But anyways, here are some of the key points. Unlike gold, silver has no support from central banks. As a result, additional demand for silver depends on speculative traders and investors. The analysis of the gold to silver ratio dynamics is increasingly important for the success in silver trading. Gold markets have recently tested historic highs, but silver failed to gain sufficient upside momentum. It did not manage to get the test of the highs that were reached back in May. The fluctuations of the gold to silver ratio served as a key catalyst for recent weakness in silver markets. At the end of May, the gold to silver ratio reached a low of 72.74 and then stabilized near 77.5 level. In recent days, the gold to silver ratio gained strong upside momentum and moved above the 82-to-1 level, which was bearish for silver markets. So what's driving the gold to silver ratio? And at this point, silver markets are mostly driven by speculators. And that's what I was kind of mentioning earlier. And that's as industrial demand is stable. And unlike gold, silver does not enjoy support from central banks, which means that silver markets must attract speculative investors to make a strong move, which is a good point. It's a rational point. Banks focus on gold. It's a tier 1 asset, but silver is mostly bought in boatloads from countries like India and China. So they both play their roles in certain parts. Gold is a monetary asset. It's a metal. And that's why you're going to see gold more from a bank. which we're talking about finance and money and preserving wealth, or silver is used industrially and with these big countries that are trying to advance digitally and technologically. That is a perfect thing along with the monetary side. So as a result, silver traders are closely watching dynamics of gold markets and start buying silver when gold is moving higher. If these traders believe that gold is about to face resistance, they sell silver. This type of behavior causes wild fluctuations of gold to silver ratio, which serves as a key indicator for silver traders. So this year, the gold to silver ratio is moving between highs of 92.1, which were reached in January, that's above the mentioned lows of 72.74. The gold to silver ratio has recently moved above the strong resistance near 80 to 1 and continues to move higher, putting additional pressure on silver markets. Now that it's moving higher, that means that gold is outperforming silver, right? It means that gold's moving faster. So in case gold markets continue to move away from historic highs, silver may find itself under more pressure as the gold to silver ratio could move closer to yearly highs. When demand for gold starts rising again, silver could outperform as the gold to silver ratio will likely decline. In this scenario, speculative traders will rush to buy relatively cheap silver to capitalize on upside moves in gold markets. Thus, watching the gold to silver ratio dynamics is extremely important for success in silver trading. I would you could do whatever you want. You're a grown adult. I just make videos and throw my opinions out there on what I read. But, I recommend just buying it and holding it. Trading is very risky, and it's kind of destroying the whole point of or purpose of why we stack is putting our money into something that holds its value. But if you're trading, that's digits on a screen. A lot of it is, on exchanges where it's just, I don't know. You can do whatever you want. Maybe I'll get into trading someday. I don't know. I'll be optimistic. All I'm saying is make sure that, you're investing responsibly, and make sure that you're still, getting back to the basics sometimes. Remember, it's very easy to get distracted and start going off this direction or that direction. That happened with me and with Bitcoin, several years ago when Bitcoin came out in like 2016, 2017. It took my focus 100%. I almost forgot about silver, right? And then I had to kind of get back to the basics. Like, wait, this is not why this is not why I'm invested. This is not why I'm stacking. I kind of got away from my principles, so I had to get back to the basics. And that could happen with not just crypto. That could happen with anything, right? So anyways, I'm going to wrap this video up here. Hope you stuck around and enjoyed this video. If you did, make sure to give it a like. And if you guys wanted to join the Secret Silver Society, the link is in the description. It's a Patreon page. It's a club for silver stackers. We do monthly silver raffles, tons of stuff in there. I think you will enjoy it. Patreon.com/silverslayer. If you guys wanted to purchase some silver, Miles Franklin is the best. You could email me, slayer@milesfranklin.com, or call me 330-485-6172. I'd be happy to help. Thanks for tuning in. This was Silver Slayer. I will see you guys tomorrow. Peace.